Imagine a world where the United States wields Bitcoin as a strategic weapon. It sounds like science fiction, but in theory, it could be a powerful way to undercut China's massive gold reserves. Here's how it might unfold. China is quietly stockpiling gold, aiming to hedge against dollar dominance and to one day back its digital yuan as a global reserve currency. Meanwhile, the US doesn't officially embrace Bitcoin, but American citizens, institutions, and tech infrastructure still dominate the crypto landscape. If major US players aggressively promote Bitcoin as the new digital gold, global capital could shift away from physical gold, where China is heavily invested, and flow into Bitcoin, which is more decentralized and US-aligned. Gold could lose its shine as a store of value, weakening China's strategic reserves. As Bitcoin's price surges and its volatility attracts speculation, gold might start to look like a relic of the past. If Bitcoin becomes the preferred hedge against inflation and debt, China's gold could stagnate in value. Now imagine the US using Bitcoin's technology to tokenize its bonds or dollars, combining dollar dominance with Bitcoin's speed and decentralization. This could make Bitcoin the backbone of a new global financial system, further draining appetite for gold. The US could even strengthen alliances with global Bitcoin miners, tightening its influence over the network's security and hash power, a domain where China's influence has already waned. Would it work? If Bitcoin dominates the next era of finance and gold is seen as slow or outdated, China's gold bet loses its edge. But China could fight back by tokenizing its gold or backing its digital yuan with it, turning gold into programmable money. In the end, the US could try to digitally bleed out gold's appeal by boosting Bitcoin. But this would likely trigger a new financial Cold War, Bitcoin and DeFi versus gold-backed digital currencies. The future of money may depend on which narrative wins.